Hey everyone, hopefully having a good day. My name's Andy. My channel's Finding Value. Scrolling through the comment section, you guys have some questions in the comment section that I can answer. It says, this is for uranium. Hi Andy, can you please reply following to me? Basically, you're using pricing charts for price predictions which went through years of dilution. Dilution is the company issued shares to raise money to do what they needed with the money to survive. If taking a look at a non-diluted stock, I get the point that it's viable. But majority of the companies in the uranium sector, for example, diluted during the last 10 years. So potential breakout in price per stock sense is perhaps not good enough indication. Does this bother you when you use charts? How do you see it? The dilution doesn't matter when you're looking at a price chart. The only thing that matters in a diluted stock is the stock may not get to that same high. So you'll still have resistance, you'll still have support at the same levels in terms of where you draw it. But it's going to be harder for that company to get back to its previous highs because they diluted shares, which means that they have to have a larger market cap to get back to that old price. And I do think a lot of people, what they do is they look at the old uranium price and then they try projecting, a new uranium price. And then they look at the old market caps of the old bull market, and then they try to project roughly the same. But the currency in the system's gone dramatically up, dramatically since that last bull market. I mean, we might be up currency-wise double to more, 3 times as much currency, which means, in my opinion, since the currency itself's been diluted, that uranium could easily do 2 or 3 times what the old previous high was and maintain the same ratios, gold to uranium ratio. And I know people think, oh, what does gold have to do? Gold has everything to do with everything. That's your monetary measuring stick. That's your only stable measuring stick that you have in the system. Everything else is just flinging all over the place. You don't know where you're at unless you price it against an anchor that is a monetary anchor. At least that's my take on it. But I don't think share dilution, it's not going to affect anything with where support, how these things break. It's just shifting the curve down. And it's going to be a lot harder to go back up because of the market cap. You're going to have to, for your shares to be the same value they were, 5-10 years ago, whenever they did the share dilution, it's going to have to go through it and be a lot larger market cap. That's all. Coming on down here, it says, you make good points, Andy. You know what will happen. These billionaires will start mining Mars. Just saw Musk's rocket can carry 100 tons or something like that. I think we are so far away from mining stuff on Mars. And just to let you know, to get to Mars and come back, it's a 4.5-year round trip. It's 1.5 years out. You have to stay on Mars for 1.5 years, and then you have to go and come back 1.5 years. It's 4.5 years. And 100 tons is absolutely nothing. What you'd have to do is send stuff up to wherever, if it's an asteroid or whatever, extract it out, refine it probably there, because you're not going to take this low ore grade stuff back. I mean, I don't think you guys realize how many tons that we go through to get like a single ounce of platinum. We may be mulling through, for 100 tons, that may only be a few ounces of platinum. I mean, that's it. I mean, are you going to send a rocket that has liquid oxygen, firing it up with millions upon millions upon millions of dollars to come back with 100 tons and get a couple ounces of platinum? Platinum's going to be dang expensive if that's the case. Nickel company other than a Russian one? I like Norilsk Nickel for the nickel company. Vale is another one, VALE. Oh, this guy's talking about why is the oil prices priced so wonky. So the near term is priced very high. And then as you go out on the curve, it's lower. So they think, or what's happening is people in the market are perceiving that we're going to have a short-term problems with oil. And that's why the near-term end of the market is very high. And they think that it could potentially get resolved in the future. So the near-term pricing's far higher than the long-term pricing. So that's, and some of these companies still have hedges in place. So they're not going to take the full effect if oil continues to go up. But they're getting some effect. Those hedges continually roll off over time. And almost a lot of companies have hedges in place, which was obviously the wrong decision to have hedges in place at this point. It says 1970s oil price increases unlocked offshore drilling, and I'm sure $300 oil will do the same for more oil sands and Arctic oil. Here's the problem. Price doesn't solve oil that takes a lot of energy to get. You are then constrained to energy return on investment, not price. Price doesn't solve a physics problem, per se. So if you're dumping a barrel of oil to get a barrel of oil back, why would you do it? Well, you wouldn't. That's the oil that's left. So we're going from I dump 1 barrel of oil in and get 100 back, to oil that I dump 1 barrel in and I may get a few back, 2 or 3 back. You can't run an advanced society on an energy return that low. You need at minimum, I would say 10 to 15. 2 does not cut it. So we're going after oil that doesn't give you that return. And if you're going to do it, you're going to have to take a high energy source to get that oil out, and then use that oil, or have that oil be special because it's something that you wanted just because of the oil, the ability to transport it. Like you'd use a whole bunch of electricity to convert it to oil. That's the only reason I could see someone doing it. Price does not solve this problem. Price doesn't make energy returns go up. And that's the problem. If we run into this problem, so we're using 4 barrels of oil for every 1 barrel we find. We are tearing through this stuff, and we've got a finite amount of it left. At least that's my viewpoint. Some people think it's abiotic oil. Abiotic means it's self-generating, will generate. I'm sure it is, but not in the time frame that we want it to be. But I just hope it doesn't end like this. I mean, I've worried about peak oil before in the mid 2000s when everyone was talking about it, and I'm starting to worry about it a little bit again because we're seeing this energy crisis pop up everywhere, and it's basically like blowing out worldwide. We could be at peak oil. I mean, it's a highly likely scenario. What does that mean? It means our system and your currency systems are all done. Like if that really were to happen, and I don't know if it is. I have no idea if it is. I'm not claiming anything here. I'm just speaking freely about what potentially could happen. And everything is predicated off of the expansion of energy. And if we don't have an expansion of energy, your GDP is not growing. Everything is tied to energy. Everything. And I think that's probably maybe what's happening is we're having problems expanding the energy. And when you grow things at exponential paces, I've talked about this before, you don't know if you're in a problem until you hit a problem. Because you're growing so fast, and it looks like you have a lot of overhead room to grow. But everything happens in the last seconds. It'll come up on you, and you could have 50% of everything that you have left. And you say, we have a ton of oil, natural gas, whatever it is left. But in 50%, if you're exponentially growing, you'll grow right into it within one doubling. And that could only be maybe 4, 5, 6, 7 years. That's all you had to react to it. That's not enough time. But you know what? It doesn't care about you having enough time. The physical constraints of the world does not care. And everything in this world is predicated off of growth. Everything. We have to have it be bigger. We have to have more energy growth. And what they're doing is they're hitting the monetary pedal to the metal. And they talked about this in the mid 2000s and early 2000s. They said they're going to continue to print money and they're going to get no response. And some people are going to say, oh, it's because the debt's so large. Maybe it's because your energy system can't grow, because your growth is tied to energy growth. Money doesn't make the world go round. Energy does. Energy is the feedstock for everything. Energy is what makes all of this money work. So we've got this debt-based system. It could be running into energy constraints, and we're seeing those constraints all over the world. And it could, the way that they had said it is you're going to see a massive spike in oil prices or energy prices in general, and then they'll collapse because the governments and economies can't take that high of a price, and then they rocket back higher again, and then you get this huge cycling of big way up, collapse, big way up, collapse, and it just cycles over and over until oil goes away, until we can't pump anymore. But I think that's still a ways away. I think we can still pump. It's just we're not meeting the flow rates that we want. So prices are going to continually go higher. And I think that we're going to probably have massive, I think it won't be a huge problem for a while, because we can always not drive. We can always get more efficient. But here's the catch-22. The more efficient something gets, the cheaper something gets. If we have technology, technology is our savior. Technology is only going to allow us to extract faster, to make things cheaper and more affordable. So when someone says, well, this TV is super expensive, no one's going to be able to afford it, and then 5 years later, everybody has two in their house, I don't see how that's cutting down our mineral usage. It's ramping it up like no other. And it has to ramp up because our governments and our economies survive and thrive off of growth. That's why everybody's investing in the stock market. They think that the future is going to be bigger than it is today, that this thing's going to grow and make me money. And I don't know. I don't have that crystal ball saying that energy is at a constraint. A lot of people say that high prices solve high prices. But I can tell you this, at one point, if we run into a problem with oil, if oil is truly at a peak, high prices won't solve high prices. The world may be living with just less energy. And that, I mean, oil and diesel is mixed in everywhere. There's a lot of things that we have to use, like producing food, fertilizers, diesel, and that runs basically your entire renewable energy market. And if we go to batteries or something else, I just don't envision that future. I don't know how we're going to get all the minerals out of the ground. When you have a massive energy shortage, you think you're going to be powering these massive trucks, going after lower and lower ore grades? We're going to go on a recycling boom. That's about it. Anything above ground, that's what's going to be repriced vastly higher, because the energy to get into the ground is going to be a lot more difficult. And I don't know when this is going to happen. And yes, it is part of Club of Rome and Limits to Growth. They wrote a book on it. I think it was a group of MIT people or something wrote a book about limits to growth. And limits to growth is basically saying that we would grow, and then you'd hit some sort of physical constraint in the environment, where you hit mineral constraints or energy constraints, some constraint. And some of these, I'll put it this way, minerals, what they did is they went down in price, all these minerals over time. We'll call them commodities in general. They got cheaper and cheaper and cheaper as technology progressed, as the mechanization became more efficient, as we've been able to suck the ore out of the earth more efficiently. So we had all these gains, some big, some small, over time. And the price of that thing, as you became more efficient to extract it out of the earth, went down, your cost curves declined. Now, if we hit an energy constraint, like say in oil, which I think we are, because if you look at what we're extracting oil-wise, we're going from very easy oil and we're going to harder and harder to get stuff, which has a lot lower returns. And when we see energy get repriced far higher, then what's going to happen is larger and larger chunks of people's disposable income will go towards energy. It's going to be, quote, very much inflationary. The price of everything's going to rocket because energy costs are going up. Your cost curves are going to go back up, not down. And as your ore grades continue to decline, your cost curves are going to continue to rocket higher. So we've been in an environment which we're basically having a paradigm shift, potentially. I'm not claiming that this is exactly going to happen, but it might. I don't know. You're coming down, you've got cheap energy. We've got the cost curves just continuing to decline over time. Everyone's saying technology is going to save us. Technology is going to do whatever. Here's a thought. This is not true. It's just a thought experiment. Let's say technology drove us into incredibly low ore grades. You have an energy problem. Now you can't get minerals. Your cost curves rocket higher. I mean, rocket higher. What used to be a cost curve of $3.50 a pound in copper is now $50 a pound or $100 a pound. How would you make money in that scenario? Well, you don't want to invest in the miner because now it costs them $50 to get it out of the ground. They could go bankrupt because the price of copper is going to have to rocket higher. A royalty company would do well, but your volumes could potentially drop, right? Because they need more energy to grow it. And if energy becomes a constraint, now that would be the perfect time to see if something different can be developed to extract this stuff. But we're running massive trucks that use a lot of energy. And to displace that, I don't know how, you're going to have some massive batteries, but batteries takes mining. So you get in this energy return loop where it's like, do you mine all this stuff out of the ground, which takes a ton of energy, and what energy are you going to get back out of it? Probably not as much as you put in with batteries and the renewables. So we're going to have to get far, far more efficient with material and mineral use and energy use. So I think oil prices are going to go rocketing higher. I think it's going to crash the economy at some point. I don't know what that crash will look like. I don't know. And I don't know when that point is. It's far higher than what most people think. It's not $100 oil. It's probably more like it. And it's going to overshoot. So $300, I think, is the last inflation-adjusted high. So it's probably above that because we're probably going to overshoot some. But it's anyone's guess at what price. So coming on down. Any opinions on Group 10 metals? I have a small position. I don't have any opinions on that. I know they've got, it's by Siboney, I think, Stillwater, a little slice of whatever, but I just don't have, I don't know. I'm not like, I don't need to own that one. I don't know why. Now, I know people, they're talking about uranium. Uranium could be one of the last really good spots to get energy from as time progresses. It's a high energy return on investment fuel. Up there in Canada, they can find very high concentrations. So if you find an easy to mine location that's close to the surface, you're not going to expend all the energy to get it. And if it's in high concentrations, that in my opinion will probably be the most valuable energy source in the future because you can transport it very easily. It's a low mineral intensity. You can build these things with small footprints and not take a bunch of copper. I mean, if you really tie this all together, I think that uranium could be one of the most valuable things in the future because of its energy content, its energy return on investment, its low use of minerals to get the energy return back, and you can run copper lines to something to generate this electricity, and you're not spread out. So your copper usage is low. Everything's pretty low. So I would think that if we were to run into a massive constraint in energy, if that were to happen, and guys, I'm not predicting this. This is just a huge if. If you look at like Exter's pyramid, you've got this big pyramid that comes down, and then gold's at the bottom here for the least risk of default. What's funny is I kind of look at uranium being at the bottom of this pyramid, where it's going to almost sustain everything in life because it's the highest energy return on investment, and it uses the least amount of materials and footprint. It's also emits no carbon or anything like that. So I do think that uranium could be massively mispriced given the cost of electricity. Now, if electricity goes rocketing higher, and uranium becomes an alternative for all this stuff, each penny increase in electricity price is $233 per pound, roughly speaking. Which means if electricity goes through the roof from natural gas and from oil and all these other ones, because some of them we do have natural gas power plants, let's say that rockets higher, the fuel costs. Uranium could easily be priced at $1,000 per pound with a 4-cent increase. But what if electricity were to go way higher? We're talking like 10, 20 cents a kilowatt hour. In order for uranium to get kicked on, uranium would be the cheapest alternative, potentially. Because you can't put a bunch of renewables in because you can't store the electricity. So you can only put some percentage in. The more you rely on those renewables, and if you can't store it, you're subjecting yourself to greater and greater risks of problems within your electrical grid. So if we can't really store this stuff, if we don't have the solutions and we don't have the grid to store it, and I don't think we're going to store it in batteries because you're going to have to make just absolutely insane amount of batteries, then you're stuck with nuclear. And if we have massive price increases in kilowatt hour for electricity, these are all if scenarios, guys, then uranium could be the cheapest source. And uranium could still be cheaper, but be priced way more expensive than where we are today, which means that the price of uranium, if everyone's going to start running at this stuff, the price of uranium would be so incredibly cheap. It's ridiculous. It's laughable to be priced where it is today. Absolutely laughable. So the scenario where, people say, oh, it could be $200 a pound, it could be $2,000 a pound. And the end cost isn't that much. And why would it be that expensive? Because everyone runs at it. Everyone in the world says, I want to put uranium in, or nuclear power. They all start putting in nuclear power because they're running into constraints with natural gas, coal, and all these others. We're seeing that happen today. Now, is that going to persist in the future? It could. It very well could. And I don't know the future. But in that scenario, if this is the beginning of the end, so to speak, in some of these fossil fuels, uranium could easily be the most expensive. The actual uranium price could be incredibly expensive in the future as more and more countries adopt nuclear power. And I'm not predicting this. I'm not saying this is necessarily going to happen. I'm just giving you a scenario. And why do you think I'm so heavily invested in uranium? Because I've thought this through. And it's incredibly cheap. And historically, it's an incredible deal. And maybe this thing's going to continue to move higher. I'm not a huge guy with the financial stuff. Like the Sprott and all this. I know a lot of people are talking about Sprott and it's going to push this up. Those are all financial moves. I want the supply-demand moves. That's what's really going to push this thing higher. And it's going to take a little bit of time, I think, for contracts and all these things to start going. And I think what's going to happen, maybe this is what's going to happen, is these people they're going to take their nuclear power plants off. California will, they're going to decommission in all these other areas. And what's going to happen is the price of energy is going to rocket higher. and they're going to turn everything back on. And there's your demand, massive demand increase. And it's because it's cheap. We already have it built. They're all going to be probably turned back on. And when they turn everything back on, your demand for uranium is going to go through the roof. That is one scenario that could potentially happen if we have energy shortages and we can't make this renewable world work without storing electricity. So I think that uranium over the next 10, 20, 30 years, it's probably one of the last best energy areas to be in because of the high energy return. And if you were to go one granularity more, I think the Athabasca region and some of those uranium exploration companies, if they have the rights to explore in those areas and they start finding easy to mine, high concentrations of uranium, I would think that those deposits will be the most valuable in the world of anything. Potentially. This is all hypothetical scenario. So that's where I've kind of put my money. I've spread it amongst all those explorers, because if they find something big and we get this huge uranium bull market, even if they find it in 5-10 years, just have a little bit of money in it. That's kind of how I view it. I'll stop it there. If you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't. And thank you for listening. This is Finding Value.